everybody, Brian Shannon here from alphatrends.net. Today's Friday, the 8th of November, 2013. Let's take a look at this market here. The S&P 500 for the week finished up just about 1%, but the closing numbers didn't really tell the story, as we'll see in a moment, as we saw a lot of volatility. NASDAQ down slightly as the semiconductors were hit a little bit harder, and financials really roared back today to bring the market back to positive for the week, up 1.1%. Bonds got crushed, and as did the interest rate sensitive, like the commercial real estate. So let's take a look at the price action here. Here's the S&P 500 daily chart. We saw that the market came down to the rising 20-day moving average, and I pointed out on Wednesday that it's hard to be bearish when we were just within pennies of an all-time high, and when we have a rising 20, 50, 100, 150, 200-day moving average. We are still in a primary uptrend, but we were expressing caution as it looked like where the market really was trading was within this band of support down at 175 and a quarter to 175 and a half, and resistance up at 76.50 to 77 dollars. So we had a real strong recovery today after it looked like the market was going to probably find some resistance near this 5-day moving average. It didn't find resistance there, which is why we only know resistance after the fact, and we don't sell short based on a theoretical level of resistance. Instead, we wait to see what the market tells us. And today it was up and away. It was above the volume weighted average price for almost the entire session here, the S&P 500 was. So very strong performance there from the S&P 500. It remains innocent until proven guilty. Although, it is a little bit choppy up in here, it gets me thinking about George Soros's phrase that volatility peaks near turning points. And we saw a lot of momentum names get hit hard, but they also came back pretty good too. So I think that the way to approach this market remains to be focused on the individual moves in the equities, and to make your decisions based on what you're seeing in those individual stocks, and be prepared for volatility. So you have to have your stops and maybe trade smaller share sizes. The volatility is coming in in a market where it is, we've had a great run this year. If we take a look at the year-to-date numbers, we're up 25+% basically for the S&P 500, for the NASDAQ, for the Russell 2000. The NASDAQ came down to and through its 20-day moving average, and was able to bounce in there. I kind of thought that we were going to, that the most likely scenario for today would have been to rally back up towards this 82.50 level, which was an important break of support this week, and then to find some resistance there, or at least pause for a little bit. But instead, we broke back up above that level and finished with a very nice gain today of 1.3%. We are at an important level. So next week, what we want to see really is probably a backup holding above $83 a share. If it can do that, then it appears as though the NASDAQ will be able to continue to charge higher. We will see that, I think about 81.50 to 82 is now the bigger band of support that we want to stay focused on. And that is, we had broken down and touched upon these lows, kind of had a little bit of a shakeout, probably took some stops out under there. So that will be an important level, although we're pretty far away from it now. The Russell 2000 came down to, it's really, well, if we take a look at the Fibonacci on here, we can see that, the Russell has been a little bit weaker here. We came down to a 50% retracement this week of the bigger move that we've seen beginning, from the October lows, that is. And we came very close to that rising 50-day moving average. Well, the rising 50-day moving average was also, as we just saw, approximate 50% retracement level, as well as some prior resistance. So it made sense to look for support in there. I don't think it made sense to buy blindly into it, although that would have worked. And we are back above this important level for the week and tested it here today. So I think that this will be an important level, 108.50 to 108.75 early next week. If we can maintain above that, then perhaps we start to see this 5-day moving average flatten out a little bit. And then this market can go back up and challenge and hopefully get back above this 110 to 110 and a half area. This has been the, what was the prior band of support, and has been acting as resistance here on a couple occasions over the last couple weeks. So that's going to be an important level for this market to get back above and hold above in order for this market to come back up to the upside and be trusted. We also actually had a measured move target hit too from this. We'd seen basically 111.50 down to 108, so that's 3.5 points, and from 110 and a half If we subtracted that, it gave us a price objective of 107. So basically what we're saying is the height of this move, A to B, this is point A, this is point B, and then we have the bounce would be equal to point C, which is right here, to point D. So the measured move came in at about a 50% retracement, as well as a prior level of resistance, as well as the rising 50-day moving average found strong support in there. So that number will be very important going forward. But for next week, I think the focus is 108.50 to 108.70 and something that looks like this trend line. But the key resistance, so this is our band of support we want to see hold. But the resistance at 110 to 110.5 will be important. Semiconductors came down pretty hard. They are still below declining 5-day moving average. I think they really need to get back above $40.80 for this for further strength to be seen. They've gotten a little bit choppy in here, and we came down and tested the rising 50-day moving average this week. So they're holding up. They're not in any danger, I don't think. But breaking back below this week's low of about $40 a share would get us to be a little bit more cautious on the outlook. The financials, as I said, roared back today. They had been in a pretty good defined downtrend of lower highs and lower lows with a declining 5-day moving average, but they ran right past that in this $20.70 to $20.75 level. So next week we're going to want to see $20.75 hold as support down to $20.70, and perhaps we're setting up for a continued breakout in these financials. What we could really call this is maybe even an ascending triangle where we have this resistance up here with the higher lows leading to it. So financials, longer term trend is still innocent till proven guilty. I'd like to see it settle down a little bit, maybe pull back and find some support before we were able to see it continue to move higher. Let's take a look at the bonds. Again, they were down 255 today, and they're still in a primary downtrend. If we look at the weekly chart, we still see, we've got a declining 20, 30, and 40 week moving average. The 50-day or 10-week is starting to flatten out a little bit, but we still have a bearish objective from this head and shoulders pattern of about 130 down to the neckline at 112. So that would be 18 points taken away from the break of the neckline at about 116. Still gives us, I think, a strong possibility of about 98 based on that measured move and where we saw some prior resistance. So I see people trying to buy this thing, but it's it kind of reminds me of natural gas over the last few years and the way people have tried to pick a bottom in that. The gold was hit pretty hard here as well today, down 1.5%. We spoke about this triangle that's been forming on it, and we're down to the low end of that range after the midpoint here has been pretty critical for it at about 126.5, but we're down to the low end of that range. We do have a declining 10 and 20-day moving average. Flat 50 is declining as well, and when we look at the weekly time frame, we're still in a primary downtrend, and it wouldn't surprise me at all to see the gold head back down towards 113 to 115. I've been saying that for a while, and I still think that's the case, that it's guilty till proven innocent, unless it can turn back probably above 131.5 or so. You still have to look at it as guilty till proven innocent. Apple had a good day today, getting back 8 points that it lost the last couple days. They did pay a $3 dividend this week, but I think that this is a key level, 528-ish. Maybe we kind of rally up towards that level next week, pull back and create, you could look at this as a shoulder, this is a head, and create a right shoulder with a higher low near that 5-day moving average and break beyond 528. That'll be an important level to keep an eye on. It is still in a primary uptrend here in this daily time frame, and I think that we could see it head back up, perhaps towards the highs of the year by the end of the year, so up near 550. So definitely want to continue to keep an eye on that one. Twitter came public and got a lot of publicity as far as it being such a successful IPO. I don't really think it's very successful when the only people who made money are the ones who got allocated shares prior to the public trading, because anyone who bought after in the aftermarket basically is losing money here. We can look at a 2-day, 2-minute chart. You can see here that it's losing ground. I think you need to stay away from Twitter for a little while. Let it settle down. What we'll be starting to measure after a little while, it would be the volume weighted average price since the IPO. Right now, that's a 2-day volume weighted average price at $46 a share. So let that one settle in. There's no hurry to get in there and start trading that stock. Tesla got hit pretty hard this week. If you look at the weekly chart, that's 2 weeks in a row we've been hit hard in here, and some momentum coming out of it. There's no sign of any support in here yet, so I'd say stay away from that one as well. It was funny to see, at least for me, the volatility index, the VXX, they did do another 1-for-5 reverse split. So this had been down at in the low teens, and now after a 1-for-5 split, it was down once again. So this is just toxic garbage. Stay away from it. I don't know how many reverse splits they've done, but it's a pattern that happens. It just bleeds off. People get excited about it for a little bit. It bleeds off. It comes down to $10, $15 a share, and they'll do another reverse split. Probably in the next 6 months or so, the way this thing seems to trade. On Alpha Trends this week, we had some pretty good winners, but we were very disciplined about taking trades, and really there weren't a lot of good, clean entries. We did have some AK Steel from last week that we got out of, I believe, on this day right here at 495. So that was a nice move, 10% or more. And actually a short sale, and this is a great example of why we have to get out quickly, especially on the shorts. We had gotten involved in this HMSY as it broke below 2103, and we were ratcheting this stop down until we got stopped out on Thursday right here at about, I think it was $19.45. Well, today they gapped lower and then squeezed the hell out of those shorts. So we were able to extract a couple points out of this thing and got out of there just in the nick of time, because again, these short squeeze rallies can be just absolutely vicious, especially in the healthcare type companies. We also had a good trade in ONVO. This stock continues to look like it should head higher, and what we're looking for is low risk, high probability trades each and every day. If you haven't taken a free trial, go ahead and take a look, and I hope everybody had a good week, enjoys their weekend, and I'll talk to you next week. Thank you.